Dow down 450 and basically stable at that level, at least for the time being. Meantime, Meta beat on the top and bottom lines this morning. That's good. But with shares down more than 10%, something has investors worried, and we kind of know what it is. Our next guest held his buy rating on the stock, but says today's report was a bad recipe for Meta. Joining us now, Rob Sanderon, Managing Director at Loop Capital. Rob, always good to see you. Thank you for being with us today. What was the nit to pick in Meta's report today?
It's the commentary on spending outlook. They've, a rare move for Meta to raise their operating expense guidance. They brought the low end up, and they're plan to spend another $3 to $5 billion in capex, incremental to what they had guided the street earlier. So there's a big spending cycle. This is not a new message per se. They've been talking about elevated spending levels for some time. The difference is that the company was putting up material upside and raising guidance the past several quarters, and the bad recipe is higher expenses on only an inline result, and that's the correction that we're seeing in the stock today.
This is kind of a theoretical question. Should or shouldn't the market look at this as a vote of confidence in what Meta is pursuing and doing, and something that in the long term is going to pay big dividends for the company, even if in the short term it means that it calls into question profitability forecasts for the next 4 or 5 quarters?
Yeah, well, that would certainly be the bullish lens for long-term investors to look through. Don't forget, the company's spending about 1/4 of their profits on Reality Labs and this vision to build up the metaverse. So that's not a message that has been too favorable with investors. No. And here we have another potentially large spending category that really is theoretical, has a lot of excitement and a lot of promise, but there's not a lot of ROI or ways to justify at this point what this might look like over time.
When you look at, let's set aside these very pointed and seemingly reasonable concerns about Meta, and you look at the current operating business, how do you evaluate that and their advertising and the fact that they seem to be not a stealth winner, but certainly a big player in the world of AI?
Yeah, the core business is very impressive, Tyler. I mean, to grow 27% at the levels of advertising revenue that they're doing is really unprecedented. Google was growing at about half this rate or so when they were at comparable levels of scale. So it's very impressive. They've done a fantastic job of utilizing technology, and AI is a big part of the story as to how they're getting better content ranking and relevance and ad matching and tools for advertisers. And a lot of this stuff is really working. It's creating value, and that's why we're seeing a pretty sharp acceleration in the top line growth over the past several quarters. So it's a very positive story there. The longer term on the AI, whether they're a winner or not, they certainly look better positioned than others. Google being the core example, where it's the jury's sort of out as to what the consequence of AI and interacting with all these agents might have on the search business. But for Meta, this looks like powerful technology that can enhance their value proposition without a lot of downside risk.
Yeah. Let's just note for the record, you have a buy rating and a price target of 555 on the stock. Let's spend the rest of our time talking about Alphabet, on which you have a hold rating. What are you looking for in its report?
Yeah, I think we're going to see stability in the search market is sort of the biggest point that investors are looking for. The reads on search advertising look healthy this quarter. We're expecting a little bit of a deceleration in YouTube, and that's just coming off of a very strong NFL cycle in the fourth quarter. We've got a lot fewer games in the first quarter, so that's natural there. And the questions are going to be again on spending outlook and their AI strategy. They had some product blunders, obviously well publicized on the Gemini launch. Investors are certainly going to be interested in management's view in correcting the course here and bringing better technology to market.
All right, Rob, thank you very much for your time today. We appreciate your analysis of Meta and Google as well, or Alphabet as well.